Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 13th of September. Okay, this CPI, the US CPI numbers are finally upon us, right? Now, this is going to be one of those numbers that can shape the direction for the US dollar, equity markets and bonds, US bonds or global bonds over the coming sort of month. Now, the yen backtracks after a strong move. Okay, we saw the Bank of Japan Governor Ueda come out and sort of talk about, potential intervention. As I said, intervening in a strong dollar market is just cataclysmically wrong. So I can't see them doing that, even the BOJ for that matter. They have done it in the past, but that's why they're generally broke. Now, what you're going to expect is when you come back to the markets and you're looking for things to sort of line up with a number like the CPI that can potentially reshape the trends in the market, right, especially across all these markets and across all the different currency pairs, then you're going to see a bit of discombobulation leading into it, right? Now, right at the moment, so the weekly change here on US equity futures is down, okay? The overall weekly performance, unfortunately, doesn't pick it up on the currencies, but if you look at the month to date, it's just a probably easier way to see if things are lining up more on a medium-term perspective. Okay, medium term, months to date, equity futures down, and equities across the board generally down. Okay, and you see here Euro, Sterling, Aussie, Kiwi down, and the dollar up against all the others. So, like the longer term trends are there. We can actually see them, right? And if you look at the charts, and I'll just give you a look at the currency charts here, right? Looking at the daily charts, you can see exactly what's going on, the levels that the currencies have broken, okay, and where they're sort of sitting at the moment and trying to piece together trading opportunities around these. Now, there's two things you need to do, right, coming into the US CPI numbers. Now, I'll come back to the charts in a second, but let's just first of all look at sort of step one. Okay, now, if I get the numbers up here, now there's a couple of things coming out. Now, and I've got the calendar here with the upcoming numbers, okay? The Reuters Tankan Index, you got the Sterling GDP, manufacturing production numbers, which I've always liked as a really directional number. But you know what? These are the side game. Do you trade them or not? Well, for me, as a professional trader, I'm not really interested in the side game. I'm interested in the main game, because this is going to, as I said, impact equities, the major currency pairs, and can filter through commodities and everything else. So this is what we're looking for. And really the core numbers, right? Take out food and energy. You've got these core numbers. And then you've got the basic inflation numbers as well, the overall numbers. So what we're looking for is the previous number is 4.7 year on year. 4.3 is the expected number, or on this calendar is called the consensus. Now, Trading Economics is expecting, with their sort of stats, a number slightly stronger than that, but the month-on-month number is 0.2, 0.2. Now, let's just put this into perspective, because you need to have a plan around what you're going to do on these numbers. Okay, so if I just clear that, come back over here, just have a look at the month-on-month numbers, right? How it's been sort of evolving. We're up around October, 0.3, slowly up, and then it's taken a bit of a nosedive, right, down to this 0.15, 0.16. Okay, and that's where you get the rounded number up to 0.2, right? So that's the month on month. So I you know what, seasonally, is it going to be impacted? I don't think so, not terribly that much. But if you look in the year on year, this is where the Federal Reserve are making their decision, right? Now, there's no the market's factoring in zero chance of a rate hike on the 19th, 20th of September, but there's like a 40% chance of a hike in November. What we want to see, if this number comes out at 4.3%, okay, which is the forecast, okay, that means to me the Fed, they've done their job and there will be no more rate hikes, right? You can say it's actually peaked. It may have already peaked. You can see that the job, sort of steadied here around at the start of the year. Now it's falling. Is it going to come back? We have seen some numbers that have suggested a bit more economic activity. So 4.3%. So that's what we're looking for. So when you come into the numbers and we are looking for, okay, these two numbers at the top, particularly this one here, right? This is what the Fed refers to. So 4.3%. There's no range on the data just at the moment. We'll post that up on the Discord when it comes through. The previous number, 4.7. So for me, right, 4.3 means the Fed are done, right? I don't think there's any hike in November. A number below 4.3 or below 4, you'll see the US dollar correct much lower, right? It'll go straight down. So if we're looking for a number, if we get a number around 4.5, okay, then or above, you're going to have the market sort of anticipating maybe one more hike in November, right? And you might see the dollar slowly come back. Ideally, you want the number to come in outside the range. And unfortunately, we don't have the range at the moment. So that's a bit of a conundrum that we're going to have to deal with as we come up to the number. 4.3, that's a considerable drop from 4.7. Okay, so it doesn't leave too much fat in the game for an opportunity where the number comes out, say, 4.1% or below. Okay, that would be ideal. You'd see the US dollar fall aggressively, and that would lead to trading opportunities across most instruments, right? At the same time, say we got some sort of anomaly and the number came out at, say up towards 4.6, 4.7, you're going to see a strong dollar move. That would mean in November, there's definitely going to be a rate hike, and that's going to crush the market once again. So this is what we've got. This is what you've got to deal with. You have to work out what's your plan, okay? And this starts with the data first before you go and look for the instruments you're going to trade. What are you going to be trading? Are you going short if the number comes out at 4.3? Don't forget, that's what's expected. So usually we're looking for something lower than expectations to get into a trade on the downside. So 4.2, sell dollars, right? It's pretty easy for me to say that because that's the general outcome. 4.3 is expected. So a number, 4.4 or above, you'd expect the dollar to rally slightly. Okay. Now, so that's based off these two numbers, right? So you get the month on month. The year-on-year number is important, or I'd say most important. Then keep an eye on the basic inflation numbers themselves, right? 3.6 is expected here, and 0.6, they're sort of like the backup numbers, right? You'd hope they all align, but the core CPI number is the one we're sort of looking at. So 4.2, 4.4. So you sort of know exactly what's going on. And if we get a number, sorry for all the pen writing here, but if we get a number, say, below 4.2%, you're going to see a big clean out of the dollar trade. At the same time, a number above 4.4, like 4.5, you're going to see the dollar continue with probably a stronger move to the top side. Right, so that's the first thing. Work out your plan based off what the number's going to do. This is the most important thing, because when the number drops, you haven't got time to think. You just need to know what you're doing on certain numbers. Don't think, react, right? Don't forget about fear and the fear of losing. You know, if it comes out 4.2, the dollar's going to go down. If it comes out 4.5, it's going to go up. That's all you need to think of, right? So then we come over to the numbers. Now, I was just showing you the longer term trends here, right? Clear as day. Let me just change that to something a bit more visual or visible. Okay, the dollar's going up. This is the long-term charts, right? And this is what the CPI number can do. It can flip these around or really confirm them, okay? So the trend is your friend. So that's the direction we're looking for, but you're going to be executing off the hourly charts. Now, to make it a bit easier, and I've spoken to a few traders about this, they sometimes forget about where the long-term trend is. So the hourly charts, is where you're basing your execution, because that's where the shorter term trend lines are, and they will give you entry levels. So what I've done is I've just put on these charts the longer term trend. Now, these darker ones, dark blue, like strong uptrend, light blue, sort of uptrend, but not as strong. And then on the downside here, you've got the long-term downtrends, right? So the idea of having these on your hourly charts is so you don't forget if you're looking at your charts, when it comes time for the release, you're looking at your hourly charts. You should know where the long-term trends are, but this will make it a bit easier using the arrows, right? So the long-term trend is up. The trend is your friend. So what does that mean? Well, a stronger number like 4.5 or above 4.4, but above 4.5, 4.6, you're looking for a continued move to the top side. Now, you're either looking to get in at the market or based off some of these levels, right? So dollar Swiss is just jamming away sideways. Dollar yen, I'm not looking to get long dollar yen. There's always the threat of something going on there. Dollar CAD, we've got a level there on the top side. And the trend, Euro, Sterling, Aussie, and Kiwi, well, you're looking to get into those pairs, right? And when I say looking to get into them, you've got some levels here, a level that resistance is just broken. You've got a support line here on Sterling and Euro. Now, this is where you would make a decision. Because Euro and Sterling are close to those levels, I'd be looking for a break trade below the trend lines, right? That's an easier one. But with the Aussie and Kiwi, they've got a bit further to go. I'd be looking to get in closer to at market below the current market price, right? Two different ways to get in. One, trying to jam into the market with, say, a stop entry order, or if you've got close trend lines, you can get into the trade below the trend line, right? That's the sort of safer one, but obviously you're going to give up some of the move. But don't forget, if there's significant variance in the number, you're going to get the move. So you don't have to catch every cent of it. So once again, dollar index, if you're trading that, you'd probably look to get into the trade on the release of the number as opposed to the break of the trend line. Now, just updating the dollar Swiss to the recent high. That's close enough to that level. So you could be thinking, well, you know what, it's trading sideways, maybe get into that. I'm not really looking at dollar yen and dollar CAD on the top side there as well. Okay, so that's basically it. And then if you're looking for, okay, a counter move. So I'm expecting, like, the US economy's got to give up the ghost at some stage. So if it comes out 4.2, 4.1 or below, right, we're going to see a big correction down in the dollar. In fact, I think it's probably even a better opportunity because you'd be looking to sell the dollar index. I'd be looking to sell dollar Swiss just below the market, right? So dollar index below the trend line, easy to put an order in there. Dollar yen, well, I tell you what, weak US numbers is going to support the BOJ. That's when they can come out and jawbone it, right? And they can start talking about, that's when they start talking about potential intervention because the dollar's already cranking lower and they've got the BOJ riding it. So maybe below the cloud or below the trend line or even at market, the dollar should continue. Now, this is one of the better trades, dollar CAD, right? You've got oil rallying through the roof, which you can see there is the green line. So if that goes down, dollar CAD goes down, right? Because the Canadian dollar is strengthening. So weak numbers here, dollar CAD has got to be on your radar, okay? The only thing, I mean, there's always a catch here, right? The only thing is there's no levels on the downside to really get in. So you're going to have to use a stop entry or trade live to get into that trade. Now, well, I'll come back to this, but one of the key things is this is a CPI number. It's one number we're really looking at. This is an opportunity where you're probably not going to be quick enough to hit the market live, right? So using pending stop entry orders is probably the go. Now, once again, weak US numbers, okay, euro topside. I mean, it could go all the way back up here to 108, sort of, what's that, 40 or 50? You're probably looking to just get into the market there with the stop entry. We've got a trend line here on sterling, which makes it a lower risk entry trade to get into the market above there. Same with the Aussie and same with the Kiwi, right? We've got trend lines. Now, out of these opportunities, and this is where I sort of drill in, I will focus on two things. One is the instrument that I seem to make more money on, right? Whether that's euro, sterling, Aussie, Kiwi, right? Probably more so than some of the dollar pairs, okay, at the moment. Dollar Swiss has got to be in your wheelhouse. But so that's one thing. Then I'll go, well, if I've got a trend line in play close to the market, I like that setup better than just trying to jam into the market with a stop entry, right? Now, you can diversify your risk, sure, across different pairs. But make sure if you go into this trading opportunity, the amount of risk you put on, whether it's one trade or across multiple pairs, that you don't overextend your exposure, right? Just take into consideration, even if the number did come out your way and you got triggered and for some reason there was some other announcement and you got taken out, make sure that loss doesn't cripple the account, right? That's the most important thing. This is one number. And as I said sort of yesterday or the day before, we've got Thursday, Friday, and a bunch of sort of big numbers across the board, across different instruments. Once we have this answer, especially with the major currency pairs, we have one side where we know the answer. So when we're trading the rest of the numbers for the rest of the week, it's an easier trading environment, right? This is one number that can crank up some good results, but at the same time, don't get put all your eggs in the one basket. Okay, so you've got some trend lines here. You've got some instruments here that you've got, trend lines to take advantage of, or look to jam into the market with stop entries, right? And this is the same for if you're looking at the global markets, right? So the overall trend here on the equities, the Dow Jones, the S&P, the NASDAQ, they're all been up, right? Now, the market's got to be nervous here, okay? But, well, it looks like they're nervous, I should say, because see how they're resting back on support trend lines? It's almost like there's a bit of squaring up ahead of these numbers, which you would expect. They're cautious about a strong number. If we get a number 4.5, 4.6 on that core CPI year on year, well, these numbers here, well, the equity markets are going to get hit pretty hard. Okay. Once again, at the same time, if we get weak numbers here, like 4.1, 4%, which I can't really see 4.14, 4%. That's a big change from 4.7. Then you would see these scream to the top side. All right. Now, gold to me is breaking down, and well, clearly oil is going up, but there's another level just above the market there, which you need to be aware of. And that's the sort of general setup that we've got. Right. So you look on your daily charts, identify the trends, and then really focus in on your hourly charts for those trend lines to get into the market at sort of lower risk entry levels. That's what all the bankers are doing, right? So there you have it. You've got instruments, you've got the numbers here, right? It just comes down to your plan. What are you going to do, right? If it comes out as expected, right, and you've got to factor this into the market, then what's going to happen? Well, not much. It might sort of discombobulate a bit, like there might be a bit of buying, a bit of selling. But I tell you what, a 4.3% to me confirms that the Fed have done their job, and it really takes the pressure off a potential interest rate hike in November, right? So that's what I'm thinking. A number below 4.3, well, the dollar should start to really capitulate. Now, when you're hypothesizing, go a step further. Say this number came out at 3.9. What does that mean for the market? Well, equity markets will rally very aggressively. The dollar will get hit across the board, right? So when you're doing your analysis, make sure you are, if I come over here to the FX chart, you'll be looking across all your instruments. And in this situation, I would be expecting the US dollar relative strength, this to be a sea of red, right? The US dollar against everything will be falling. Well, euro against the dollar obviously be going up, and then you can start to sort of piece together what's going on. If you see this a sea of red here, right, then you know, like, you're just looking for levels to get short dollar, right? Because it means, you know, the interest rate hikes are over, inflation's under control, we're almost back to the target, you know, that 3% range where they'll start factoring in rate cuts. So that's where we are at this point, and you need to have all this information readily available and make sure you've covered all the bases before you go into the trade. Now, for new traders or even medium experienced, I'd be focusing on one instrument, right? Now, depending on where you are, right? If you're in the UK, sterling should be your go-to, or euro. Okay, if you're in Australia, Aussie or Kiwi, or New Zealand to be Kiwi. In North America, Canada, well, dollar CAD you go. As I said, a weak number here really goes a long way. You'd expect dollar CAD to catch up with oil and drop a decent chunk, that's for sure. So potentially focus on your best instrument, look for the pairs with the best technical setups, and then focus on, instead of trying to be cheeky, right, and capture both sides of the market, just look for the side that you understand and works for you and works for the whole market. As I said, I'd say something around 4.5%. We'll get the range here. As soon as we get the range, we'll post it. A number below, it's like 4.1 or less and greater than 4.5. These are my sort of extremities just at the moment. I'm selling definitely if it's 4.1. In fact, I'd probably be adding to the positions. Above 4.5, well, the dollar's is going to continue jump back up. So that's where we are. All right. Now, this is much better than the non-farm payrolls or these other numbers, right? You've only got really one variable to keep an eye on. Okay. And that's pretty much it. So just keep an eye on the US Treasuries, okay, and the global 10-year bonds. We are seeing a bit of activity there filter through. Now, for those traders who don't understand what you're looking at, the daily percentage change, this is the price fall, means the yields go up, right? Now, out of the odd one out here is the Canadian dollar, right? The price went up, so the yields fell. So, and that's sort of getting referenced a little bit. So the bond yields, very important. You need to understand really how the equities, bonds, currencies, interest rates connect, and then you'll be able to piece together what's going on. Right at the moment, okay, you've got, like, you'd expect this to be the same across the Asian and European sessions. I don't expect too much activity on the currencies at this point, leading into this release. All right. So just to reiterate, plan the trade. It starts with the number, then go in and plan your instrument you're going to trade and the potential outcome, and then go from there. So the major currency pairs in play, and maybe incorporate these arrows so you know which way the longer term trend is. So when you're trading, it makes things a little bit easier to think, right? You got to think about what you're doing. The trend is your friend, but in this situation, I'm backing. My hunch is a weaker number, right? And that's what I'll be sort of planning on. All right, guys, have a good one. All the best. Cheerio.